Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. I'm going to spend a lot of time on the SPX because a lot of things will trade off it. You know, if you want to go to the 5-minute, go to the 5-minute because a lot of guys, a lot of guys like, hey, RedDog, what's the H sell setup? Okay, so this is a good example. First of all, so here's your pull down. So, and here is, yesterday's low. So a lot of people will try and trade for continuation to yesterday's down move through this. But what first might happen is you might get a bounce up, okay? So, if the market, I would say if the sellers, want to stay in control, they won't let the market really bounce too much past this 262 to 265, which would be, less than half of the range, which would show some weakness. So, if you're looking to do an H sell setup here, okay, let's do it with the spiders because most of you probably trade the spiders versus, that's the futures intraday. So here you have this. Here is your, actual low. Okay, so you break below. In order to go lower, to have a second or third down day, you have to get through the prior day's low. We all know that rule. So what it might want to do is it might want to rally first. So here is 236.05, and here's 235.70. If the market's really weak, okay, and rallies up and gets rejected at 235.70, I would think that, all of a sudden the bears get a little bit of, conviction. And then, you have an H type of scenario here where rallies up, comes off, maybe you short a little bit there, starts to roll over in the first hour, and then you want to short below yesterday's low. Maybe you then get continuation down towards the 50-day to test it. So that really is, almost, Freddie, you could even clip that off. That's the H sell setup. Comes in, makes a low, okay, big ugly candlestick. Next day tries to rally up, or maybe takes 2 days. You get resistance 1, you get resistance 2. Anything above this and it negates the power of this. So at resistance 2 or 1, you short some, comes off of it. You now have a level to trade against short-wise, rolls over. You now have a good price because you shorted up there. Then if momentum to the downside picks up, it breaks below here and continues down. So that to me, is the H sell setup. And then you can flip it over on the other side, okay, where you go to the daily candle, okay, and basically what the RedDog reversal is, which we all know, okay, is it trades below 234.54, goes down to 234, tests the 50-day, holds it, comes back above it, you buy it, you put a stop here. So if you got, stopped out the prior day, higher, so just say like, yesterday, like a lot of us got stopped out when it, went above this and couldn't hold it, you're now buying it, $2 cheaper, and then you also have some price discovery because if you buy here, at least it held here. So anyway, that's some of my my thoughts for the spiders and the S&P cash moving forward here, okay, and even for today. So there you go. You have a pretty big inside wedge here, and the question is, which way does it resolve? And as of right now, it does have a more bearish look than bullish look. But we'll see what happens next. So the question is, what sectors can give us some clues of whether or not it's bearish or bullish? Go to the Qs. Qs have been very strong. Tech's been the strongest. It had what you call a RedDog reversal also, and almost an outside day. So if the Qs were to hold this spot, go sideways for a day or two, absorb this weakness, and then go, it's going to be hard for the bears to get any traction. If the Q's trying to hold here and can't bounce and then breaks below yesterday's low of 131.72, that would help the bearish cause. So we'll see if this candle leads to anything. All in all, it's been a tremendous run in the Qs. If you look there, it's 1 day. 1 day doesn't make a new trend. Here's where it broke out from. You could, draw lots of ways. This is one trend line, and then from here, this is another. So it's really still not even at the momentum trend. Last time, if you remember that 1 day wonder, just to show you, okay, it wasn't really a 1 day wonder, but remember that big wide range bar that scared the what out of everyone? Well, the next day, it took back a third. So if you were shorting that day, saying, hey, we got to get follow through to this downside action, you never really got it. You had to be really, really patient and then, cover the exact right time, on the 50-day. So just don't blindly, short every, tick up saying we have to get follow through to this. Wait and let the market tell you. You want to go to the 5-minute chart here also, we might as well, same kind of thing. If the H sell setup wants to happen where tech bounces a little bit, I would say, 132, what is this, 132.50 to 132.70 should hold it. If all of a sudden it starts getting above 132.50, 132.70, that means this was nothing. It was just an emotional move to the Fed statements. If it wants to create the H, okay, where maybe it turns here, it goes down, you're shorting versus that, so now you shorted a bounce, and then when it comes down and all of a sudden rolls down in the afternoon, maybe something comes out with Trump and the president premier, boom, breaks out and goes to the downside. So, tech, needs to weaken in order for the shorts to make money. The strongest name. Amazon has a topping tail, right? This was your buy when it broke above 862, broke out, or you bought it here at the 50-day, and then boom, boom, boom. A lot of you guys got short yesterday, and hopefully that 920 didn't stop you out, and you made some money. We made a little money in the start of the day, and some of you guys that were sitting at your seat, which I wasn't in the afternoon, got short, and then you made money. Now, if you went home short this, okay, which a lot of people probably did, saying, hey, look at this topping tail from here to here. Look where the 8-day is. There's room, okay? You gotta see map out some things, okay? It's up $2-3 this morning. You could get the H sell set up here too. What do I mean by that? First of all, remember this, we all shorted into there and then made a little bit of money. And then this is when, in the morning I got stopped out. I said, hey, gets above this, I'm not gonna fight it. I wasn't at my desk, so when this happened, this nice little, 5-minute wide range bar that didn't get reclaimed, and then boom. So I would say, if you're gonna get continuation downside in Amazon, and those of you maybe who went short overnight, if it rallies back up, maybe goes to 915, comes off of it, you short verse 915, then it starts to roll down, then you get your add when it breaks below here for a little bit of downside. But up $2, if you shorted right on the open thinking it's gonna go red, just know Amazon could push you. It was the last thing to go down. But that also doesn't mean that's to get there. So anyway, you'll see what happens with Amazon. I can give you some clues. If it happens to open up a few bucks and reverses quickly and gets below this, you'll probably see some of the other, momentum names get a little weaker because this has been the king of it. Have a good day. I'll be in touch today, and I'll see you to recap. Bye-bye.